A $900 car payment used to mean you bought something special. A Mercedes, a loaded pickup, maybe a car your neighbors would pretend not to stare at. But in America now, $900 a month can mean a normal SUV, a big screen, and a financial leash attached. So here's the question. When did owning a car become freedom on the outside but pressure on the inside? A car is supposed to feel like independence. You turn the key, merge onto the highway, and for a few seconds, life feels open. But for millions of Americans, that feeling now comes with a bill that arrives every month like a tow truck for the soul. The driveway looks successful, the bank account looks nervous. The trap starts at the dealership desk, not after a missed payment. A buyer walks in asking, "How much is the car?" And the conversation quietly becomes, "What monthly payment works for you?" That sounds helpful, but it changes the entire game. A full price feels heavy. A payment feels survivable. Once the dealer knows the monthly number, the loan can be stretched, fees can be folded in, and an expensive vehicle can look affordable without actually becoming cheaper. That matters because the average new vehicle is no longer cheap transportation. Kelley Blue Book reported that the average new vehicle transaction price in April 2026 was $49,461. Edmunds said the average amount financed for a new vehicle in Q1 2026 hit $43,899, with the average monthly payment at $773. Those are not fantasy supercar numbers. That is the regular American showroom, where a family crossover can cost more than some people once saved for a house down payment. The lower end of the market has also been squeezed. Cheap sedans are disappearing, small cars are harder to find, and automakers love crossovers, trucks, and higher trims because they bring better margins. So the buyer who only wants reliable transportation gets pushed towards something larger, nicer, and more expensive before they even ask for leather seats, black wheels, or a bigger screen. That is why the monthly payment becomes so powerful. A $49,000 sticker price makes your stomach drop. A $773 payment sounds like pain you can manage if you cancel a few subscriptions and stop treating DoorDash like emotional support. But that payment is only the headline. The real cost is hiding behind it. Insurance, maintenance, registration, tires repairs, interest, and depreciation. Bankrate's 2026 data puts average full coverage car insurance around $2,697 per year, or about $225 per month. If the car is financed, full coverage is usually required. So the $773 payment can push close to $1,000 before the vehicle even leaves the driveway. At that point, the car is not just transportation. It is a second rent payment with cup holders, and the $900 idea is not fake YouTube drama. Edmunds reported that 20% of financed new car buyers in Q1 2026 had payments of $1,000 or more. 1 out of 5. Not just celebrities, not just tech bros in California. Regular buyers are leaving regular dealerships with payments that can compete with rent in parts of the country. Then comes the part that makes the trap last. Loan length. Edmunds said 84-month or longer loans made up 22.9% of financed new car purchases in Q1 2026, an all-time high. That means more people are paying for cars across 7 years or more. 7 years is long enough for a kindergartner to become a middle schooler, while the same payment keeps knocking every month. The problem is that the loan stretches, but the car still ages normally. The miles climb, the warranty fades, the tires wear down, the new car smell disappears and gets replaced by old fries under the seat. Depreciation does not care that your loan term is dramatic. It keeps moving. That is where negative equity enters. Negative equity means you owe more than the car is worth. Maybe you owe $35,000, but the vehicle is worth $29,000. Now you cannot sell it cleanly. You cannot trade it without carrying debt forward. You are not just driving a car anymore. You are driving a balance sheet with Bluetooth. The most dangerous sentence in the dealership is, "We can roll that into your next loan." It sounds like help, but it often turns one bad loan into a bigger one. Edmunds found that buyers rolling negative equity into a new loan had an average monthly payment of $932 in Q1 2026. That is the trap with chrome wheels, yesterday's debt riding inside tomorrow's car. This does not happen because Americans are stupid. It happens because cars are emotional. A pickup says you work hard. A Corvette says you finally made it. A Tesla says you believe in the future, or at least enjoy arguing about charging online. A BMW says you love driving, even if the turn signal has entered witness protection. A Dodge Charger says your credit score may be nervous, but your right foot is brave. Dealerships sell that feeling. Automakers sell empty highways, sunset reflections, leather seats, deep engine sounds, and family moments that somehow include no traffic, no insurance bill, and no check engine light. The dream is cinematic. The bill is practical. That gap is where people get caught. At the national level, this is not small. The New York Fed reported auto loan balances at about $1.69 trillion in Q1 2026. That debt does not stay parked outside. It affects savings, rent, groceries, credit cards, emergency funds, and whether someone can leave a job they hate. A car can look like freedom from the outside while quietly limiting every other choice. Approval makes the trap feel official. The buyer hears congratulations and thinks the car must be affordable. But approval is not a blessing. It is a lender deciding the risk is profitable enough. The bank is not asking whether this payment will crush your grocery budget, delay your savings, or make every repair feel like a personal attack. It is asking whether you will probably keep paying. That is why car culture needs a new flex. Not poverty thinking, not anti-car thinking, just clear thinking. The coolest person in the room is not always the one with the freshest keys. Sometimes it is the person who can walk away, sleep peacefully, and buy the car when the numbers actually make sense. The car should serve your life. It should not quietly become your life's biggest boss. Because horsepower feels amazing, but freedom feels far better every single month. So what is the escape? First, never shop by monthly payment alone. Ask for the out-the-door price, interest rate, loan term, total interest, and total amount paid. If the conversation keeps sliding back to the monthly number, that is not guidance. That is the magic trick. Second, check insurance before signing, not after. Before, a young buyer looking at a truck, Tesla, BMW, Mustang, or Charger can get humbled fast by one quote. The car you can afford to buy may not be the car you can afford to own. Third, treat long loans like warning lights. If the only way a car fits is 84 months, the car probably does not fit. The payment fits. Different thing, a shorter loan may hurt more today, but it can lower the chance of being stuck tomorrow. Fourth, respect negative equity. If you owe more than the vehicle is worth, upgrading can make the hole deeper. Sometimes the smartest move is not a new car, it is keeping the current one long enough to escape the old loan. The real flex in 2026 is not the biggest screen, loudest exhaust, or most aggressive grille. It is options. A paid-off car gives you breathing room. It lets you save, invest, handle emergencies, and sleep without a lender sitting in the back seat of your life. That does not mean car people should stop loving cars. Cars are culture. They are identity. They are road trips, first jobs, night drives, and horsepower therapy after a terrible week. But loving cars does not mean letting a finance office turn your future into paperwork. So before you sign for $900 a month, ask one brutal question. Would you still want that car if the dealership had to say the full cost out loud? Because under showroom lights, almost every deal looks beautiful. The paint shines, the screen glows, the keys feel heavy. But the real test comes later, when the payment follows you home. And if this video made you see car payments differently, hit like and subscribe, because the smartest car people do not just understand engines. They understand when the deal is driving them forever.